And now we're switching to English for the next presentation because it's GreenMobility, a Danish company that has developed a car sharing solution, which is very promising, and they show high growth in numerous cities in Europe. And presenting will be Anders Wall, the head of investor relations. So over to you, Anders.
Very much, Oscar, and welcome everyone. I'm very delighted to join you all here today and give you an introduction to GreenMobility, our business, and also how we plan to expand into additional cities around Europe. As Oscar said, I'm VP of Investor Relations and Head of ESG here at GreenMobility. I've been with the company for about 3.5 years now. The company is only 4.5 years old, so I've been along for most of our developments and also all the new markets that we've entered. GreenMobility, in short, is an electric car sharing system. We base our business out of Copenhagen, but are currently active in a number of cities. I'll get back into that. Originally, we based the business on 3 megatrends. They are all very much true today as well. One is urbanization, the fact that we are all increasingly moving into the larger cities. We are bringing along 1, 2, or even more cars and causing obvious problems. The second one, sustainability, the fact that we need to act, we need to do something. This is fortunately something that politicians are already working on, cities and so on. The last part is the sharing economy, which is a vital enabler for our business. The fact that we have gotten used to sharing things, whether it's our cars, whether it's apartments for vacations, dresses, bags, or other things. So these 3 megatrends are still, to a very large extent, driving the business. We are a green business. As you see on the screen, we call ourselves the greenest mobility provider. And to us, it's important that we emphasize the green part, that we challenge each other and cities to become and to stay green. When we look at urbanization and what we see around not only Europe, but the world, the increasing amount of cars coming in are naturally causing problems, not only to the environment, but also on queuing, so essentially lost time, parking issues, noise, and so on. These are some of the things that we in GreenMobility are trying to initially lower, but ultimately remove and make a better city environment. And when we look back at when we started, I had the pleasure of starting and building up our international business. And I've spent a lot of time traveling around European cities, meeting with mayors or other people working in city halls and city planning. And interestingly enough, just a few years ago, the idea of having sort of sustainable shared solutions was a sort of a nice to have, but definitely not a need to have. And that has significantly changed during the last couple of years. So we've gone from talking to something that could be interesting to something cities are now demanding. So I remember traveling around, was lucky getting to sort of a third layer at a city planning office, whereas today we are called directly by mayors. So it's gone from a push to a pull effect, if you like, in the market. And all of this is, of course, driven by the ambitions of reaching the various goals of CO2 neutrality, whether it's in 2025, 2030, or later. Most large cities, countries around Europe have set these goals, and now they've actively started to pursue these goals. If we jump to the next slide, please. In addition to working on CO2 reduction, we also look very much on how does infrastructure in a city work, what is needed, and how do car sharing fit into this. I think it's important also to look at the various types of mobility that we need in a city. And there are obvious things that we can't replace, and which is not our intention either. Traditional city needs public transport, what we call long distance here. We would never be able to move as many people at as low cost as a train, a bus can. Similarly, we also see the need for short distances, whether it's by kick scooter or bicycle or something else. Typically, ultra short trips that doesn't really make sense to do in a car. We serve the mid distance in this equation, where you travel typically 3 to 7, 8, 10 kilometers, maybe even a bit further, but where it's more a point-to-point solution. Our average trip today is probably 7 to 8 kilometers. Typically, if you go from a suburb into the city center or similar like that. In addition to saving or reducing CO2, we also focus on reducing private cars in the city. Back to the megatrends before, this is not only just about switching from traditional cars into electric, but also reducing through sharing. So we measure ongoingly how many private cars are we actually reducing. We do this by asking our customers every year, and currently we are in a ratio of 1 to 4. So for each car we have on the street, we replace 4 private cars. So people are actively selling their car to switch to our solution. Next slide, please. A little overview on our business today. We started in 2016 and went public on Nasdaq First North in Copenhagen in 2017. And then just last year, we transitioned into main market listing here at Nasdaq Copenhagen. Today, or actually as of December, we had roughly 115,000 customers across our markets, where Denmark is still the main market, if you like. As you can see here, we also focus very much on KPIs like CO2 saved. This is something we measure ongoingly live every day. There's actually here at our office, there's a ticker, big screen that indicates how much CO2 we are saving. Across our cities, we have 7 active cities today across 4 countries. So in Denmark, it's Copenhagen and Aarhus. Sweden, currently Malmö and Gothenburg. Finland, obviously Helsinki, and then in Belgium we have Antwerp and Ghent. In combination, 950 electric vehicles across these markets today. On the map, you also see what we call announced cities, and these are cities that we are actively in the planning phases of. Sorry. So we've announced our intentions to launch in these cities. As you may be able to see on the map, it's Oslo, it's Brussels, Vienna, and then Germany is more as a general market to enter during this year as well. Next slide, please. This morning we released our annual report for 2020, so I just put in a quick highlight of our annual report. You're very welcome to download it from our website and go into much more details. But some of the highlights from last year, I think, especially when we look at a year that to a large extent has been impacted by the pandemic, which also impacted our business, we were still able to launch 5 new cities during this time. In Copenhagen, we reached operational profitability as the first EV car sharer. This was truly a big milestone for us, but also in the industry that we've proven you can not only make money on car sharing, but also with an entirely electric fleet. And of course, this is expected for our other cities to come as well. We carried out an investment round last year, and then, as I mentioned, we transitioned into main markets. The table more or less speaks for itself, but I think in respect of the year of a pandemic, we're actually quite satisfied. We've done a lot of great results and achievements during the year, and ready for much more growth in hopefully this year and coming years as well. Next slide, please. Looking a little into our business and the product that we provide. Naturally, we are a 100% green company in the EVs that we operate, but it also goes into the energy that we use. So we focus very much on our suppliers to make sure that the energy that we use are originating from sustainable sources. Overall, this is a matter of keeping things very simple. And by that, it means the app, which is the access for all our fleet, getting into the car, using the service. Fundamentally, we are changing habits. So it has to do with you changing the use of your own private car today for a shared car tomorrow. To change habits, we need to make things very simple. Otherwise, we will meet too many obstacles. This is just a general observation. So this is a key area for us. Naturally, everything is on one app. You find the cars, you reserve them, you unlock them, and then you drive wherever you want to go. You can do this in a number of different ways, either pay by the minute you're in the car, you can buy prepaid hourly packages or even daily packages. So we have solutions catered for more or less all needs. In our structure, we look very much on, of course, making again easy on parking, but also charging. So we work with a combination of private parking and public parking, and the same goes for charging. On parking side, we've created what we call hotspots. These are centrally or strategically located parking areas that are reserved for our cars, simplified with a logo and easy to access. And we ensure that you can always find a car, and you can also always leave any of our cars at this location. So it's easy to get to the theater, where we can do that, shopping, restaurants, and so on. Again, coming back to the ease of use. We jump to the next slide, please. From sort of the customer perspective of the business into the back end of the business. We focus very much on, again, maintaining everything. We operate on a 24-hour service. The cars are available at 2 a.m., so naturally our team is available as well. All our services are in-house. We believe having our own team is where we can provide the strongest proposition to our customers. We are most flexible, and we can adapt more easily to whatever's going on day by day. This means that in all our cities, we have our own street crew. These are typically young people taking care of the cars, meaning they will clean them, they will make sure they're charged, they will relocate them if needed, and so on. This can be done either from our platform, in the sense that we have a lot of monitoring systems that will indicate if a car is low on battery, so that automatically pushes a task into our street team. It could also be a customer calling in saying someone left garbage in the car. Okay, so then we trigger a manual approach. So there's a lot of different ways, some fully automated, others are manually, because ultimately that's the reality of it. But we've built the system and the platform behind to support this on a continuous basis, so we can be as dynamic and adaptive as we need. And naturally, we don't have 2 days alike. Everything from weather to customers to traffic and so on all impact our business, and this is what we are excellent at adapting to this on a continuous basis. The structure of our business is built upon what we call a hub and satellite structure, meaning that we have a few cities that are acting as hubs. Here we have customer service, we have marketing teams and management, whatever is needed. So Copenhagen is a good example of that. The rest of our Scandinavian cities are run from Copenhagen, meaning we only have street teams on the street. We don't have a lot of offices. So this ensures that we can run on as low cost base as possible. But it also gives a lot of flexibility in the business. Our entire fleet is naturally monitored in the sense that we have tracking devices. We can see where they are, but we can also monitor battery capacity, whether doors are open and closed, and so on. The update is not to monitor our customers, but to have the information that enables us to provide the service as smoothly as possible. This is also the data that goes into assisting our team in placing the vehicles at the right locations, knowing when a car is low on battery, and so on. Obviously, we also use the data to improve the business, build up the knowledge on where is mobility from day to day. So it is different from Tuesday afternoon to Sunday morning. And this is predictable, we can build it into our business, and it's scalable. There are obviously differences from city to city, but there are also trends that are similar regardless of where we are. So we can take this platform, we can take the knowledge and experience we have built up in Copenhagen, and we can replicate, well, not replicate, we can duplicate this to our new cities. which enables us to launch faster, but also build up the business locally faster. And next slide, please. And coming back to the development part of the business, based on the data that we have in our system, naturally also customer input, we continuously develop the product and the platform behind it. A few examples of what we've done last year was adding a pre-book functionality to our platform. And this was a very basic need. We saw a lot of customers wanting, especially business customers, wanting to use this service. But what if I need to go to the airport? Maybe not as relevant last year, but in general, if I need to go and be at the airport at a specific time, if I have a crucial meeting or similar thing. So we offer the opportunity of pre-booking a car, which you can do 8 hours, just 8 hours before, and then we will deliver the car to you, or within 500 meters, depending on which option you choose. Similar, we also saw a need of transporting goods. Whether we go to IKEA, we go to another furniture shop or something else, builder's market, having the opportunity to transport larger goods. So we have a number of electric cargo vans in the fleet as well, and they can be booked in just as easy as any of our other vehicles. Lastly, we have new packages that we introduced last year. And this was also a customer need where we typically saw in vacation times, the utilization of the fleet dropped because people were not able to take the car for longer trips, also because it was too complicated on a price and product perspective. So we added new packages where you can have the car for up to 7 days now. And the map just indicates, if you're familiar with Copenhagen and Sjælland, it's you have Copenhagen with all the green dots, Malmö on the other side of Øresund. But all of a sudden, we saw cars spreading all around, even to the other parts of Denmark. So even though we are a city car service, the service can be used widely now. Next slide. Another addition to our product offering last year was a dedicated B2b platform. Since day one, we've had customers we have had companies as customers utilizing the service, but we saw an increased need of tailoring it more to specific business services. So this idea of we need the luxury or the advantage of having company cars, but we also like the flexibility. We want to go electric, but we don't know how to do it. So we built up a platform around that with a dedicated app for companies to do their own administration, and then we maintain the fleet and provide a flexible solution for them with electric cars. So essentially, they have their own little car sharing within the company. The benefit and where it becomes very flexible for companies is when they've used up all their company cars, they can actually go into our fleet as well. So you have the flexibility of moving from 2 or 4 or 5 company cars into our entire fleet. Because as a business customer, you can see the entire cars, but traditional customers or normal customers can only see the public fleet, part of the fleet. So here we can connect 2 worlds and create a truly powerful tool for B2B customers. Next slide, please. Our business model, in a very simple way here, but to a large extent, I think our business is a simple business, meaning that when we look at this graph, it indicates launching of a new city. We measure everything by the car because the car is ultimately our cost center. It's also a revenue driver. So launching a new city, we can predict the cost level to a high certainty. We know the leasing cost of a car. We know a parking cost if we have such. We know salaries, marketing, and so on. That's indicated by the green line. I can see that the graph is a little blurry here, but the green line is the cost level. It's fairly stable over time. It increases a little bit in the beginning, but then over time, we expect it to drop simply based on lower cost on EVs, which is something we've seen already since the start, that cost for EVs will go down over time. On the other side, we need to build up revenue. This is not unlike any other business, similar to if you were to open a shop around the corner. From day one, you have to build it up. We do this, of course, through our product, through marketing, where again, we leverage the experience we have from our existing cities. So same type of campaigns, typically online, typical via social media. But we also have various commercial corporations in the individual cities we're in. Could be with energy companies, public transport companies, and so on, where we can generate more traffic or different marketing campaigns with them. When we look at this, it's a little bit difficult to see, at least it is on my screen, but typically we expect the city to break even within 2 to 3 years. And during these first 2 to 3 years, on average, we invest 2 to 3 million euro in negative cash flow. That's what it's going to cost us to reach break even on an average city. So it enables us to track the individual cities very easily because we can measure it on vehicle basis. And I'll give you an example of that of some of our cities in a minute. If we jump to the next slide. Here you see our performance measured in terms of active customers over time. It goes back to when we started in 2017. And obviously we were affected by the pandemic last year as well. But if you look at sort of the overall trend, it's a constant growth over time. And more interestingly, we sort of had the initial shock of COVID first half of last year. But then once we reached summer, it sort of evened out. And since then, we've actually seen constant growth throughout the second half of last year. We do have seasonal drops when people go to on vacation or for Christmas and so on. But over time, there's a very stable development in the business. Next slide, please. The development through second half of last year also led us, as I mentioned in the beginning, to post profitability for the city of Copenhagen. Truly a milestone for us. And here back in August or September, the profit level was around 350,000 Danish kroner per month. And this is the level we expect when sort of we have something that looks like normality in the city, which we had at least in Q3 and also partially in Q4. Again, we benefit from the scale and the experience. So the learnings we've built up in Copenhagen, we can translate this, so we can transfer these directly into other cities. So where Copenhagen took us 4 years, it was the first cities of obviously in the beginning a lot of learnings. We expect Aarhus, our second city, to become profitable within 2 years, so much sooner. And similar on our other cities, they will benefit from all these learnings, and we can make them effective and profitable sooner. And on the next slide, we can see the effects on this. And this is back to the business model before. Here we measure for Copenhagen, we measure revenue per car on a quarterly basis. And you can see again a similar trend as the graph before. Obviously a dip in first half of last year, but then a clear rebound in the business through Q3 and Q4 last year. And this also clearly resonated back to saying that the break-even level was typically around 1,000 euro per car per month. This is in the area of 3,000 euro here when we see 23,000 kroner per quarter, which is also the time where Copenhagen is profitable. So it makes sense. But here we see again a growth trend that continues despite a pandemic, which I don't know if it's safe to say we are past it, but I think we are learning to cope with it. We are learning to have society where we need to make specific precautions, but people still need mobility. And if anything, we've seen that people are looking for alternative ways of having mobility than they used to. So even though we lost some on traveling, on nightlife, on big educational institutions, at least for now, the opposite is that people are slightly moving away from public transport or other transport form where we see a lot of people into shared mobility. They're changing habits, which obviously benefits our business. Similar, if we go to the next slide, just to show the city of Aarhus, it's not at the same level as Copenhagen, and it shouldn't be. It's only a little more than a year old. But it shows a similar graph, and it shows how we develop the city over time. And here in Q4, we are at a level of, we're actually more than halfway to profitability. So this is expected to break even this year. And similar graph we build up for new cities once they have a bit more than a quarter of revenue. And that way easily we can track them. Next slide, please. Yeah, just a quick overview and of our customer acquisition cost, how we work with our marketing. It's quite stable over time, and we actually have a relatively low cost per user. It's around 10 euro, and over time, as I said, it's stable. Lifetime value over a 4-year period, which is the maximum we can measure at the moment. But it's not that we see people opting out. It's more a matter of this is the time frame we have for our data. Next slide, please. We are a green business, so obviously we measure CO2. We work very heavily into clearly sort of measure and report on these various things. Next slide. Similar for UN Sustainable Goals. This is a bit difficult to read. I'm sorry for that, but just maybe to indicate that we have active and clear programs and areas of focus on each of these. This is something we follow up as part of our annual report. We released this released today. We also post an ESG report, which can be found and then goes into much more details on these, our actions and the goals and so on. Next slide, please. Looking into the future, it's always difficult, but for us, it's about how's the market developing. When we started our business, we typically looked at cities with 1 million+ inhabitants. Now we've proven we can operate down to 250,000 inhabitants. So the market size has grown dramatically. There are more than 160 cities in Europe where we can expand our service into. So we don't see any big barriers to market. Now it's just simply a matter of building our business and scaling this as fast as possible. Next slide, please. And as I said before, we do this on a hub-based structure. We are probably going to have a few hubs throughout Europe. Whether they're located exactly here, time will show, but this is as an illustrative example. But this hub structure is also what enables us to lower cost levels dramatically and make a much more effective business over time. Next slide, please. I think we are running out of time here. So, and for us, we're looking even further into the future. We see great potential within Europe currently. Cities increasingly are looking for shared solutions. They're looking for electric solutions. But at one time, we will have autonomous vehicles. And for GreenMobility, it's a natural part of our development cycle, or development journey. We can switch our existing fleet into autonomous vehicles. And remember, whether they're self-driving or not, we still need to service them, we still need to clean them, we still need the customer service to handle them. So we are building the platform that can service an autonomous fleet as well, some years into the future. And if we jump to the last slide, which is why we've set our aspirations for 2025 of reaching 35 cities and more than 10,000 EVs. As you may remember, today we are in 7 cities, so we still need to do at least 28 cities in the coming years, which translates to roughly 5 to 6 new cities a year. Last year we did 5 cities, so this is at a level we're already performing at. So we're quite confident that we will reach our targets for 2025. Oscar, I think that was more or less at the time, right?
It's you're spot on, I would say. It's we have 10 minutes for
Very
questions
good.
now, so perfectly timed.
Perfect.
Great, and thanks a lot. I think that the second to last slide was quite interesting and sort of for framing my questions here. The future mobility. What I was curious to know is sort of the choices customers today have between sort of choosing a car from GreenMobility or either choosing a Uber service or even a Hertz service when it sort of comes to longer trips, or the new models that are sort of popping up with Lynk & Co. having sort of you own the car, but then you can lease it out to others. How do you believe this will play out over time? Will there be a place for everyone, or will one model gain over the other?
I doubt we will have one model, because I think it depends on the situation we're in. Depends on what we need to do. So an Uber obviously is perfect when you need to be driven somewhere, whether you need to do something, whether it's going home from night when you've had something to drink, or other situations where you don't want to drive yourself. We see a lot of our customers who are choosing to drive by themselves in one of our cars because they don't like taxis. They don't like a driver, obviously an individual choice. So I think there's a lot of different sort of use cases where it's a choice of doing one over the other. Similar for rental cars. Our business is not for long trips. You can take our car if you rent one of our cars from Malmö, you can go to Stockholm and back. It has a charge card, so it's easy to do it. But that's not our business focus. We are focusing on city centers. I think it makes much more sense to rent a car if you need to go long distance or longer time. But for shorter distances, it will be more expensive to rent a traditional rental car. So again, I think we will see various solutions for various needs.
Yeah, more individuality in that sense.
Absolutely.
And if we speak about sort of the future landscape, you touched upon the sort of public transportation side of things in one of the slides. And do you think there will come a time when public transportation companies develop car sharing solutions of their own, or start to subsidize perhaps car sharing solutions that are already in existence?
Absolutely, we see that already. Actually, in Oslo, we used to have our operation in Oslo as well in a cooperation with Vy, the Norwegian state railways. They operate the service on their own now. We see examples of both in Germany and in Austria where public transport, they're not operating, but they have entered into various commercial corporations where you have at least the idea of subsidy in it. So I think we will see more and more of those. I don't necessarily think that we will see public transport companies going into this, because it is a fundamental different way of operating than operating buses or trains. I wouldn't know how to do that either. I think and comparably, having a fleet of car sharing would be very small business compared to operating trains. That said, there are natural links between the two. If you go by train, it's predefined the lines you can go, but it's rarely where you need to end up. So combining reaching a station by train and then switching into shared mobility is obvious. We do a cooperation with the train services in Denmark. If you go to Aarhus, you can combine the two. And I think that integration also in terms of route planning is gonna become much, much larger.
Yeah, I agree with you. And what about the subsidy?
Sorry, if I can. Because ultimately, what we deliver the service has to be as smooth as possible to the user. You don't care about essentially what type of vehicle you're in. If you were to invest in a car, then brand and specs would matter. But on a day-to-day basis, you just want to get there as easy as possible.
And if we look at that side of things, I guess the sort of uptime, if we borrow sort of airline language, is important for your cars. How do you handle the servicing and to make sure that the cars are always available for customers?
You are touching on something that's truly important. I mean, availability is key. If you exit your office and you want to go somewhere, it is a matter of having the car as close to you as possible. This is again something, simplicity, availability, just make it easy for me. So this is our task. This is also what we've built with our platform, a combination of predictability. We know when and where cars are needed, and we can manage our service accordingly. Having 100% availability is naturally impossible, but for us, it's a matter of, an example would be that we prioritize charging during the night where less people are moving around, so they are fully charged for next morning. Again, making it as easy as possible.
And do you do predictive maintenance yourself, or how do you sort of make sure the car is always in perfect shape?
We do we do a lot of maintenance by ourselves. Again, looking at if we were to move the car to a car dealer every time there was a small problem with it, it would cost us simply too much. So again, we have our own team. We even have a small service van that moves around. We can do a tire swap if we have a puncture. We can even do a change of a bumper. All of these things that are relatively simple. Maybe you and I, as a private person, we wouldn't be able to, but for us, it's a huge cost saver in the business. So if a car needs to have a side mirror changed, we can do it in 30 minutes rather than taking it out of service 3 days to go to auto repair.
Yep, that makes sense. And I find it extremely impressive that you've managed to break even in Copenhagen, are well on the way to do that in Aarhus as well. But what kind of utilization rate, if you can call it that, are you currently running at in Copenhagen?
Typically, we look at reaching roughly 3 hours of utilization per day to reach that level. It varies a little bit, both, of course, on cost levels, individual cities, also how is the blend in products. If we have more packages with longer driving time, then the minute rate is lower, and then does the revenue as well, relatively to the time driven. But on average, we should have upwards of 3 hours to become profitable.
Okay. And the break-even level, as illustrated, the costs that you showed in the graph, are they sort of all-in cost, or what kind of costs?
It's the costs we look at are what we call the operational costs. So everything that is related to that city. So obviously the entire fleet cost, but also the proportion of shared costs such as customer service, marketing, that is directly related to that city. Sorry, but next to that we have our headquarter back-end services that are not attributed directly to a city. So my salary, for instance, would be on a headquarter basis. But everything that is tied to running that fleet in that specific city is part of that cost structure.
Okay, and even the financing cost for the vehicles and everything. So
yes, so all leasing costs are. It is when we look at that operational profitability for Copenhagen, it's on EBT level. So bottom line.
Oh, that's and another thing I saw about the metrics. It appears that sort of if you look at the revenue per trip made from the slide you had early in the presentation. It has sort of increased from, I calculated very fast, at like 60 Danish kroner today versus 40 in 2017 or something. Would you expect that to increase in the same level over time?
We see one of the challenges when we go back a year, then we had only a few sort of product configurations. Today we have a much larger product configuration possibilities. So it becomes a little more blurry. If you take the car out for 7 days, it costs you around 2,500 kroner. Then essentially it's one trip, but one very expensive trip. But it's a lot of minutes out of the service. So it's always about how do we compare these things. But we do see that people are using it more and more frequently. So on average, we would see that it will rise.
And now we are running out of time, I see, unfortunately. So I think we will have to conclude here. There are many other questions that we could ask, of course, because this is a super interesting topic. But I thank you for presenting to us, Anders, and we hope to see GreenMobility in Stockholm soon.
We would love to come to Stockholm. It would be our pleasure. Thank you, Oscar, and thank you, everyone.
Thank you.